It is extremely common for investors to pay more tax than they are required to pay on their money market dividends from money markets like the Fidelity Government Cash Reserve Fund, FDRXX. You end up overpaying on taxes at the state level because either you or your CPA, many CPAs miss this, did not properly account for the amount of your money market dividend that was tax exempt at the state level. I'm going to show you how to fix that problem. The reason this happens is that you get a 1099 from Fidelity. The 1099 shows all of your money market dividend as ordinary dividend, and then either you on your own or your CPA simply enters that ordinary dividend on your return, and you don't take the necessary next step, which is to go to Fidelity's tax information for their funds and determine what percentage of the fund's dividend was tax exempt at the state level. If you don't do that research on your own, or your CPA doesn't do the research, and as I said before, many CPAs unfortunately miss this, then you will end up paying state tax on money market dividend interest that you should be not paying state tax on. Your Fidelity 1099 will not tell you how much of your money market dividend is state tax exempt. So to determine how much of the money market dividend is exempt from state taxes, you have to go to Fidelity's tax information website. When you open this document, here's what you're going to see. 2024 percentage of income from U.S. government securities. It's going to be a list of all the Fidelity mutual funds and the corresponding percentage of the fund's dividend that should be state tax exempt. A portion of the dividends you earned may be exempt from your state's income or investment tax. Most states exempt the dividend income derived from a fund's investments in U.S. government securities. So now we need to determine what amount of Fidelity's government money market is state tax exempt. Let's take a look. In 2024, Fidelity Government Cash Reserves Fund, FDRXX, had 57.19% from treasuries. That means that 57.19% of your dividend is state tax exempt. If you don't do this research, or your CPA doesn't do this research, then you'll end up filing your state income tax return incorrectly, and you will end up paying state income tax on more than half of your money market dividend when you don't have to. Now that assumes you live in a state, which is most states, that have an income tax. A few states do not, but for most of you watching this video, you're probably living in a state with an income tax, and you need to make sure that you file your state income tax return properly. Now that interest rates are real again, for some of you, this could be thousands of dollars in taxes that you are unnecessarily paying at the state level. And by the way, this analysis is not just limited to money markets. There are many, many, many mutual funds at Fidelity and other companies like Vanguard where they have treasury interest in the mutual fund that is exempt from state tax. You need to research all of your mutual funds when you are filing your state tax return. If you have questions about your investments, please give my office a call. We would be happy to give you a free second opinion on your portfolio. If you like this content, please share it with your friends. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.